This is my first video of the year, and my portfolio has seen better days, as I'm sure yours have. But I hope 2026 has been kind to you in other ways. So today I want to talk about CME gaps because I think they're very interesting. The CME is the Chicago Mercantile Exchange. Unlike several other exchanges, it brings buyers and sellers together. But these buyers and sellers are trading derivatives of other assets, as specifically futures and options contracts. Derivatives derive their value from underlying assets. Because I find futures contracts much more intuitive than options contracts, I will focus on them for the rest of this video. A futures contract requires a person to buy and sell a predetermined amount of an underlying asset at a predetermined price in the future. That's why they're called futures contracts. They are obligations and they are legally binding. They also have expiration dates. Some futures contracts are settled through physical delivery of that underlying asset, while others are settled through a cash settlement. Some of these underlying assets include gold, copper, silver, cocoa, wheat, and crude oil, natural gas. They could also include cryptocurrencies like Bitcoin or Ether. Because futures contracts that require physical delivery of an asset are easier to understand, I'm going to illustrate one use case of futures contracts, and I'm going to use the cocoa futures contracts in this illustration. In 2024, there was a cocoa bean shortage, and this was because the key producers of cocoa beans, the Ivory Coast and Ghana, reported the lowest cocoa bean yields in over 22 years. And this was due to climate change, something that is still affecting cocoa farmers, as well as cocoa plant disease. As a result, there was reduced supply of cocoa beans, and the demand remained strong. We all love our chocolate and our cocoa butter and other products that are derived from the cocoa plant. As a result, the price of cocoa rose from 3,279 in January of 2024 per metric ton of cocoa, which is per 1,000 kilograms of cocoa, to a high of $12,000 per metric ton in December of 2024. Since then, the price of cocoa, a metric ton of cocoa, has reduced to about $3,000 per metric ton at the time of recording this video. So it's a very volatile market. It's not just cryptocurrencies that experience volatility in prices. Now, the price of cocoa beans in June could be $2,500, it could be $4,000. No one knows. And so buyers and sellers who want to lock in a price for cocoa beans so that they can achieve a level of certainty in an otherwise volatile market can decide to enter into futures contracts. So a seller, let's call her Sheila, might decide to enter into a futures contract that expires in June, that requires her to deliver a certain amount of cocoa beans, with the expectation that she'll be paid $3,500 per metric ton. She could be matched to a buyer who enters a futures contract that will require him, let's call him John, to accept a predetermined amount of cocoa beans and pay $3,500 per metric ton for them. So at expiration in June, Sheila will have to deliver the cocoa and John will have to accept it. So irrespective of the price of cocoa, Sheila and John need to honor that contract. I'm going to talk about cash settlement because there are futures contracts that require a cash settlement as opposed to a physical delivery of an underlying asset. So let's say Sheila and John had both entered into futures contracts that have that stipulation. If the price of cocoa beans is $2,500 in June, John will have to pay Sheila the difference between the contract price, which is $3,500, and the current price of cocoa, which is $2,500. If the price of cocoa is 4,500, then Sheila will have to pay John $1,000 per metric ton of cocoa. So in this way, there is no physical delivery of cocoa. Everything is settled via cash. The Bitcoin price is also volatile, like the price of cocoa and the price of other commodities. So for different reasons, farms and businesses might choose to enter into futures contract that can give them a level of certainty, again, in an otherwise volatile market. Bitcoin futures contracts are settled via cash. You can trade futures contracts or futures 24/7, but the CME closes on Friday at 4 p.m. CT and opens again on Sunday at 5 p.m. CT. The closing price of a Bitcoin futures contract could be 84,000 on Friday. And on Sunday, the opening price for a Bitcoin futures contract could be 77,000. So because of that difference between the closing price and the opening price, a CME gap is created. There is a tendency for the Bitcoin price to revisit prices within that gap. It could also revisit 84,400. There is a tendency, but it's not a requirement, it's not a fact, it's not set in stone. There was a CME gap at 91,500 that was filled. There was another one between 77,000 and 80,000 that was equally filled. But there are CME gaps Bitcoin and the world have forgotten about. They remain unfilled. So CME gaps might be filled. They might also not be filled. But the tendency is that they will be filled. So currently, there is a CME gap between 77,000 and 84,400. It might be filled. It might not be filled. And if it is filled, we do not know for certain when that will happen. Sometimes it's filled in days, sometimes it's filled in weeks, sometimes it's filled in months. The CME gap occurred at the beginning of February and remains unfilled. So we'll see what happens. If you want to know more about futures contracts and other ways that they can be used, please check out the information in the description. If you're curious about CME gaps, I've provided some information in the description that you can refer to. But this is all that I have for you today. Thank you so much for watching. Please like, subscribe, and share it. It really helps the channel. And I'll see you in the next one. Take care.